What's going on, everybody? Today I'm going to be bringing you a video on how to use Robinhood and what all the terms inside Robinhood actually mean. Now, looking here right at the beginning, we can see we have a chart showing us the value of each of our stocks. We have 1 day, 1 week, 1 month, 3 months, 1 year, and all time. All time is usually the chart that you're going to want to be looking at most of the time, because this is going to visualize what you've made since you've started investing. 1 day shows you how your stock is doing in that certain day, but you shouldn't be too concerned with that, because if you have a bad day, you shouldn't let that get you down or anything, because as you can see, you have bad days every other day pretty much. Now going down, we can see all of the stocks that we're holding. Robinhood automatically puts them up at the top for you, but in Robinhood, you can hold down and change the position of that stock inside your portfolio. Like for me, I have Shop all the way at the top because it's my most important stock, and it's probably the most volatile outside of TRXC, which I don't really care about, to be honest. Moving on, we have each stock individually and all the information that Robinhood gives to you about each stock. Shopify, it tells me how many shares I own of it, what my equity value is. This is the total price of all of your shares combined. It shows you the average cost. That's how much money you paid on average for each share that you've purchased. And then total return and today's return, which is pretty straightforward. Volatility is how much movement the stock sees. If the stock sees a lot of movement up or down, Robinhood is going to label it as a high volatility stock. Usually, if you're going to do long-term investing, you want low volatility stocks that give you steady gains. Buying power, it tells you your buying power right here. That's how much money you have on the side to buy stocks. Recent news in Robinhood kind of sucks. A lot of their news sources aren't very good, like Yahoo Finance. Yahoo Finance isn't one of the best resources for people to use. It's good for beginners, but a lot of the times Yahoo Finance goes back on itself, and it's very hypocritical. I don't think that Yahoo Finance is a good place to get your information from. I don't know, do your own research, find out who you can trust, and there you go. The statistics it gives you about each stock, the price that it opened at for the day, the day's high, the highest price that the stock was at for that day, the lowest price for the stock was at for that day. And then it also tells you how high, the highest it's ever been in the last year, as well as how low it's ever been in the past year. As you can see, I am not really that close to the 52-week high because there was a huge dip recently. So that's why the 52-week high is higher than the price that it is now. Volume tells you how many stocks there are on the stock market for this specific company. If you wanted to buy the company outright, all you have to do is buy 246,827 stocks. The market cap is the total worth of this company, basically all of the shares combined, so the volume times the share price. PE ratio, I don't know why this company doesn't get a PE ratio, but PE ratio is the price of the share up here divided by how much they make, so their earnings. So usually the lower the PE ratio, the better. Higher PE ratios, higher PE ratio companies like Amazon. Here, I'll show you real quick. Amazon. Amazon has an extremely high PE ratio of 300. This is because people believe in Amazon and Amazon's the future and stuff like that. So the share price is way higher than how much money they're actually making. Or the share price represents way more than what the share actually makes. What the company actually makes. Moving on, we have dividend per yield. The dividend per yield is the ratio from how much dividend they pay out per stock price. So pretty much the higher number you have here, the better the dividend it's going to pay out. The dividend right here, this is pretty much the only dividend that I've received so far. I have received a dividend from Microsoft. They have paid out 42 cents per share for this latest dividend, and I'm going to get a total return of $8. Usually, it takes a while for you to actually receive the dividend, maybe like over a month. So as you can see, I don't think it actually tells you when you receive the dividend, but it's still pending, and I should receive the dividend on December 14th of this year. The next part we have on here is the earnings report. Now, Robinhood actually shows you what their earnings have been, the earnings for the company that you're interested in for the last couple of months. Each company goes through fiscal quarters, quarter 1, quarter 2, quarter 3, quarter 4. This is a 3-month span in a year. So quarter 1, you can see that as spring, quarter 2, summer, quarter 3, fall, quarter 4, winter. And that's just the earnings that the company has pulled in for that section of time. Usually you can tell, usually a stock price will go up if they beat expected earnings, and usually the stock price will go down if it doesn't beat expected earnings. Some stocks will go down even when they beat it. Some stocks will go up even when they lose it. So it's not a guaranteed way of making money if you play just by quarterly earnings. The next section we have right here is history. This shows you the history that you have with that certain stock. It shows you what you've bought, what you've tried to buy. We'll go more into that in the future. But it shows you everything that you've done with this certain stock. The last section is the about section. This just gives you a little summary of what the company does. It might give you an idea that you might want to invest into that company, but you should not base your investment decisions based on the about section in Robinhood. Now, when it actually comes down to buying or selling a stock, Robinhood gives you 4 different options for you to choose from. The 4 options that they give you is market buy. Market buy just allows you to buy the stock at the given price that it is at the moment during the day. The other order types are limit. Limit lets you buy the stock at a certain price that you're willing to pay. So, say the stock is currently worth $83.20. You can put that you're only willing to pay $75. And time in force means that you can have that limit only for today, or you could have it forever. So if it ever hits $75, you will automatically buy shares of that stock. A stop loss is a price that you give Robinhood, and the shares that you have of that stock will immediately sell if the share price hits that predetermined price. So say you bought a stock for $80 and you put a stop loss for $78 so that you don't lose any more money when it starts to go down. Robinhood will automatically sell that stock at $78. A stop limit is a price that you give Robinhood after you bought a stock for when you want to sell the stock. Say you bought a stock at $80, it goes up to $85, and you set your stop limit to $85. It will automatically sell that stock to help you lock in the profits that you made. It's pretty much everything Robinhood has to offer as far as stocks and stocks information. Robinhood doesn't give you extremely accurate graphs, but if you're a long-term trader, that really isn't something that you should be worried about. Robinhood's mostly for beginner investors, and if you want something more advanced, you should use like Thinkorswim or other websites that give you more advanced stock trading abilities. Thank you guys for watching this video. I really hope you enjoyed it, and I really hope that it helped you out. If you guys want to get a free stock and sign up for Robinhood, there's my link in the description. You get a free stock, and that can catapult you to making more money for yourself in the future. Thank you guys for watching, and I'll see you guys in the next one.